Bitcoin is back above $103,000 this morning, recovering some of its losses from Monday's risk-off sell-off. Our next guest says that Bitcoin's current rally could be in jeopardy. Here to discuss is Anthony Georgiades, founder and general partner at Innovating Capital. So Anthony, the bulls have been out when we talk about crypto. Why are you bearish on the recent run-up in prices?
Definitely. Well, I think generally speaking, we're seeing obviously a lot of risk-on sentiment. Things are priced to perfection. We're seeing that obviously with NVIDIA and obviously a lot of the AI fears around DeepSeek and what that might mean for obviously a number of incumbents and key clients who are putting billions into CapEx spend surrounding that. I think the same goes for Bitcoin as well. It's not to say that I am skeptical or anti the crypto progressive regulation that we're seeing, but I think it's one of those things where we need to be careful what we wish for with respect to things like a strategic reserve and certain legislative oversight.
So then what does that downside look like?
I see the downside less in terms of impacting Bitcoin in particular and more pertaining to other altcoins. Specifically Ripple. There's a lot of positive sentiment in the market for Ripple right now and a lot of excitement around Ripple as potentially a strategic reserve. But I see a lot of fundamental flaws in XRP in particular, and honestly view a strategic reserve backed by Ripple as being the demise of the network itself for a number of reasons.
And going back to Bitcoin, do you think we've reached the top of prices?
So we're very, very much so long-term holders of Bitcoin. Price targets, well in excess of 7 figures and 7 digits, right? Where Bitcoin is today, if you look at just from kind of a short-term perspective, I do think that the market has priced in a lot of the positive catalysts over the last several months, and there's still a lot of risk-on behavior tied to Bitcoin as an asset. We saw yesterday the sell-off in AI and tech assets in general, and what that did to the price of spot BTC. Generally speaking, I think the market's priced in a lot of potential friendly regulation and the probability of certain catalysts like a reserve taking place. Whereas, frankly speaking, the underlying fundamental behavior for a lot of that to actually make its way and permeate through the market, it's going to take years.
And let's talk a little bit about RXP. You seem to be hot on that issue. Certainly, we have seen a massive surge, to say the least, up by 50+%, I believe, since the start of the year. When you talk about worrisome signs here, why you are a bit concerned, lay that out for us.
So it really goes back to the fundamental behavior of how Ripple itself operates. XRP, the token, runs on the XRP ledger, a decentralized ledger of sorts, which has largely been scrutinized for being controlled and manipulated by Ripple Labs, an independent organization that I somewhat view as smoke and mirrors. Ripple Labs maintains a lot of influence over XRP, particularly how networks are validated by selecting a node list of validators that process all transactions, and most participants in the network use Ripple Labs' default node list. So what does that really mean? Why does that matter for all of this? I actually view this kind of weakness and fail point in the centralized aspects of Ripple as really being why the government would even consider it to be a key candidate for reserve, because they could actually purvey mass regulatory overreach and influence to ensure that any transactions that occur on the Ripple network itself comply with all U.S. regulations, comply with all nation-state laws. They may ban particular transactions from particular institutions or nodes domiciled in particular geographical regions. And that fragmentation of trust will really lead and ultimately result in a large breakdown of the network itself, potential forks, loss of network value. And then it just kind of begs you to ask the question, what's the point of this decentralized token at all? It's not going to compete with Visa in terms of speed or performance. It's not going to compete with anything that we know from a centralized perspective, but yet it will become a captured network in that respect. So I view it as a quasi-centralized token that doesn't necessarily have fundamental competitive strengths with existing centralized projects, and by no means has a place in a decentralized ethos.
All right, Anthony, thanks so much for your insight here this morning.